I'm delighted to welcome today Nina Owen. Nina heads up Capright's hospitality sector. Welcome, Nina.
Thank you. It's nice to be in person today.
Yes, it is, isn't it? Let's get straight into the market. We're at a midpoint in 2024. A good time for you to update us on the trends that you're seeing in the performance in this sector.
Well, normalization was the consistent theme throughout the NYU Hospitality Investment Conference in June, both in terms of market fundamentals as well as the investment market. So the forecasters are no longer expecting the double-digit high growth RevPAR that we saw coming out of the pandemic and are expecting more slow and steady growth. At the end of 2023, Smith Travel Research STR was projecting about 4.1% RevPAR growth for 24. During the period from January to April, there was only a 0.5% increase in RevPAR, so they've reduced their forecast now to 2.1% for the year. LARC is projecting 1.8% for 24, and HVS is at 1.7% for 2024. Occupancy in most markets has stabilized and maybe even declining slightly, so it really is rate that is driving the growth.
But occupancy
RevPAR.
is stabilized at a consistent, acceptable level.
Correct. Now, the forecasts are for the country overall. But there is a lot of variability market to market, and even within the same market, property to property. It really depends on what type of demand the hotel is accommodating and the trends within that particular segment. Supply growth in the U.S. is below the long-term averages, and that should help support RevPAR growth going into 2025. However, operators are experiencing pressure from rising costs, labor costs, and also insurance, real estate, and utilities are tweaking up, creating downward pressure on profits.
So RevPAR is only just keeping pace with operating expenses.
More or less.
More or less, yes.
Yeah.
So what does this mean for a risk-return profile for an investor, for private equity or hospitality REITs?
So the REITs experience the same pressure on profit margins as the operators. In addition, REITs have to deal with rising finance costs and lower valuations. In very general terms, REITs are priced at about 10x, whereas the operators are 16 to 17x. So the REITs are undervalued. Investors do not seem to be putting as much of a premium on liquidity and tax benefits as perhaps they should.
Is that because they're skittish in this election year? Is that going to change?
Well, that is part of it. I think part of it has to do with the operators have a few more levers to pull. They have more direct control over occupancy, over rate and expenses. They also can create new income streams for their properties. I think it's interesting what Hilton is doing with AutoCamp and small luxury hotels of the world. They're creating a partnership, and they're not buying the brands. They're just offering them to their database of loyal customers, creating a revenue stream, and giving their customers new, interesting experiences.
Yeah, that's interesting how the operators can do that, but the REITs are stuck with whatever product they've invested in. Yeah.
Right, exactly.
So what about the future? What about your projections for the next 6 months and beyond that?
Well, you mentioned the election, and that definitely creates volatility in the investment market. Most of the brokers are saying they want to have deals closed by October 15th or so. But I think, the hospitality industry is a great business to be in. And I think some of the trends that are supporting the sector in the short term are the ability to price rooms every night is a hedge against inflation. And hotels are outperforming some other sectors in CRE, particularly office. There are, the geopolitical risks are real and heightened in some areas, so that is something that's on the horizon. But I think long-term, the shift after the pandemic towards experiences over goods will be a positive trend for hotels. And in addition, the growing middle class globally will help create demand.
Yeah, well, it's good to hear there's fundamental growth drivers for this sector. Yeah, thanks for coming in to talk to us about it, and we'll
Absolutely.
see you next time.
Great.